Let's turn to another force that's been shaping the markets this year, especially the individual investor. Mom and pop trading is at a decade high right now, powered by free platforms. You know about them, Robinhood. We got lockdown boredom and a once-in-a-lifetime investment opportunity that's been out there lately. But among all of the trends, COVID-19 has accelerated. The retail investing boom is perhaps one of the hardest to measure. What impact has this rise had on the markets? Let's drill down on that question. Nick Maggiulli is Chief Operating Officer at Ritholtz Wealth Management. Nick, good to see you. Thanks for joining us today.
Thanks, Bill. Appreciate it.
So regale us. How much is individual investor behavior up this year? How much does it contribute to the market this year in the United States?
So retail trading last year was about 15% of total volume. And this year, in the first 6 months, they've estimated, someone at Bloomberg estimated that it was about 20%. And on some days, Citadel Securities found it's up to even 25% of volume. So you're seeing a big increase from last year, for sure.
Is that good or bad? I mean, you know, the long-time mantra on Wall Street was that the market hits a top when the public gets in. You know, you have the irrational behavior of the markets. Is that where we are right now, do you think? Is that what you're saying?
I don't think so. I think retail investors specifically have been out of the market for a long time, and now they're just starting to get back into it, get more interested in it. I think it's great that a lot of young people are getting involved in this, and I don't necessarily see signs that this is like, the same type of bubble behavior that we saw in like the late 90s. I think that was far, far more beyond what we see today.
And we should point out, I mean, individual investor participation in the markets in other markets around the world is much, much higher than it has been here in the United States, right?
Yes, in Asia, it's up to, I think, 80 to 85%. If you look at Shanghai or you look at Korea. And that's compared to 25%, that's just night and day.
But do investors have it too easy right now with the free trading platforms? You don't have commissions that you have to pay when you trade. Are they treating it like a video game right now? Is that the problem?
I think there is some of that going on. I'm not going to lie. I think one of the biggest hypotheses out there for why this happened is because all the sports betting went away. And so a lot of traders got into this, and now they're like, this is my new thing I do, and they're very involved. At the same time, you know, free commissions, I think, are great overall, and so some people can be abusing it, but I think a lot of people are just doing it to learn, and I think it's going to be a net benefit regardless.